All right, traders. Hey, Jason Brown here with the brownreport.com. And hopefully you watched the last video where we talked about the head and shoulders pattern. If you didn't, there'll be a link to it at the end of this video. So in this one, I want to talk about the reverse of that pattern, which is the reverse head and shoulders pattern, which is a bullish pattern opposite of the original head and shoulders, which is a bearish pattern. So let's take a look at it with Expedia. So we've been talking about this stock. We sent a couple tweets out about it. So let's look at it. If we take a look at the formation of this, so here's your left reverse shoulder right here. And basically all that's simply saying is the stock, was at this resistance level, sold off, kind of didn't quite make it back up, but you can say it basically sold off from that resistance level again and then pushed lower. Now as it pushed lower, the stock rounded out, which formed the head of the head and shoulder pattern, and then it wouldn't be complete unless it formed a right shoulder. So on its way back up, notice it stopped pretty much right here at this resistance line again and sold off and then reversed back up. So there you have the formation of the right shoulder. Now the thing about a head and shoulder pattern is it's not complete until it breaks the neckline. And so the neckline is considered this area right here, but I am going to use one of these to draw it. So this is the neckline right here, or you can consider it these two peaks right here. But notice those peaks happened right at this let me turn this off. It happened right at this resistance level right here, or right here just shy of it. So there's your left shoulder, there's your head, there's your right shoulder, and then there's your neckline for your reverse head and shoulder pattern, which is bullish. And as you can see, this stock has been moving higher. So now let's zoom in and take a look at how you want to play this thing based off the daily chart. So if we zoom in here, there's a couple things I want you to take note of. There's also a flag pattern that I'm seeing, and I hope all these patterns aren't confusing you, but the flag pattern is, this is basically your flag pole right here, and then here is the flag blowing in the wind. So hopefully my Etch-a-Sketch drawing is making it simple for you to see that this is your flag pattern. And basically a flag pattern is a continuation pattern. And how do I know that? Well, let's look at it. So we had a big movement up, and then we had 1, 2, 3 days of retracement, meaning the stock pulled back. Now it's, why do I call this a retracement and not a, or some people call it a correction? So how do we know? Well, you have to analyze the candlesticks, right? So first of all, let's look at today's action on the candlestick, which is December 9th. The stock opened right here on this left side. Okay. Then the stock ran down throughout the day, could not stay down. Stock was bought back up by the buyers. So notice they bought it back above this line that used to be resistance, is now acting as support. And I'll zoom out and show you what I mean in a minute. So, and not only was it bought back above where it opened, it was bought higher. So it actually closed higher on the day. That's pretty bullish to me. Here's the second thing I want you to take note. Notice that this pullback that's happening on this flag pattern. So let me redraw it again. This pullback that's happening, the pullback is happening on declining volume, right? So if this was, a bearish reversal or a big sell-off, we would see increasing volume pushing this thing down. That's not what we see. We see decrease in volume on a little bit of a consolidation right back to the support line. Pretty much bounced off of it. It fell through for a minute, but it's about where it closed. It closed back above that. So I'm looking for tomorrow. If I had to draw this short-term pullback line, I'm looking for a breakout above that line tomorrow, a candlestick breakout above that, and then I think we continue to go higher from there. Again, long-term pattern, reversal on the reverse or inverse head and shoulders pattern, a little bit of a consolidation here on declining volume, bouncing off this support. I'm looking for a breakout above this little pullback line, and I think we're off to the races. So but hey, one thing you always have to keep in mind, if we're wrong about this analysis, let me throw this one in there for free. If we're wrong, this is where you'd keep a stop loss. So let me zoom in, because that's important. Nothing is ever guaranteed when you're trading. So if we're wrong, where will we know we're wrong? Well, you saw the bears couldn't push it below here for the day, and they definitely couldn't keep it down here. So we will know we're wrong if this stock comes from way up here tomorrow, comes down, breaks support, keeps going, breaks this level that it couldn't break yesterday. That's where you want to be stopped out at, because at that point the analysis is wrong, and that happens sometimes. But I think it's smart to know where to cut your losses at. So hey, if you like this video, do me a favor, leave a comment below, subscribe to the YouTube channel, hit the like button. I make these videos for you, so your energy, your comments, your feedback is what keep people like me going. So I'm looking forward to hearing from you. And then check out the video that should be right off to the side that's talking about the head and shoulders pattern. And I'll see you on the next stock market tutorial.